So, what does that actually mean? If you look at the bottom line for investors here, what this diagram shows is the expected cash flow of a project, right? Where you go in a project, you make your investment, you construct your project, and then you have cash flows from your project. And of course, you have to pay back debt, etc., right? Now, the light blue column shows the expected payment coming to the project from the sale of carbon credits. Now, what we see now, because of the big delays and the, let's say, low success rate, that these payments are coming in much later. So in theory, right, the carbon revenue starts soon after a project enters operation, but in reality, the carbon revenue stream is extremely unreliable and delayed, right? Even for some investors, the first cash from carbon comes after the expected payback period. Now, what is the implication of that? The implication of that is that under current condition, right, investors cannot rely on carbon when they plan their project financially, which also explains in part why, for example, banks in Thailand are not willing to value the cash flow from carbon credits when assessing the risk of a project, or if they have to go through the approval of a loan. And the carbon revenue is only a cherry on top. Now, that is actually quite problematic, because it deprives, basically, it makes this carbon credit and this whole carbon business actually irrelevant. Next. So let's look at the underlying factors. So why is that actually, right? Now, one factor is clearly that projects in Thailand, the typical project that have a chance to go through the CDM, are of a very complex nature. We have a lot of, let's say, the biogas, the biomass projects, which are, from a monitoring and reporting perspective, under the rules of the CDM, quite complex. There's often the problem that monitoring information is not complete, that we have to make up data, that the entities in charge of allowing us to do that become increasingly, let's say, conservative, because they fear backlash from the UN. When compared to other countries, like China or like Vietnam, they have a higher share of projects that are actually easier to monitor and verify, like wind, like hydro. That partly explains why that issuance rate is so much higher. Now, if you look at the delays, right, some of the delays that we see in Thailand are induced by the government process, because compared to other countries, the actual approval process to get a letter of approval for a project, the government has, let's say, additional requirements that are additional to the ones that the UN requires, and additional to the procedures that, for example, other countries have adopted. And a third point, also actually quite relevant, is that while on the one hand, the renewable energy policy environment in Thailand is quite fantastic, there's a lot of incentive there, tax breaks, feed-in tariffs, right? It is not well integrated with CDM relevant considerations, especially this idea of additionality, right? It raises a lot of questions. That means there's a lot of information going back and forth between us, project operators, and our verification entities. And then there's additional UN scrutiny, making it very difficult to reconcile the different aspects that are required. On the one hand, the domestic policy that makes a renewable energy investment actually attractive, and CDM rules which say that we need to demonstrate that a project only happens because of the value brought to the project through carbon credits. And this is really, becomes very quickly a chicken and an egg problem that's very difficult to solve, but holding up things in the process. Next. So I'm pretty sure I'm running out of time here. So if it's been such a dismal experience, the money comes late, it's unreliable, why bother? Why bother putting up with that, right? Why continue, even for a company like us, why stay in the business of trying to get carbon credits? Next. Well, let's look again at the big picture, right? The path to the low carbon economy requires substantial investments, right? According to the IEA, the incremental mitigation effort needs to be financed to the tune of $1 trillion per year, that is, right? The source of those fundings have to be diverse, right? We are far short of having that money available. When we talk about the need for additional adaptation finance to protect us from the worst consequences of climate change, we have a similar picture, and we're much short of money. That means it's just too big of an issue to ignore the finance that could be available through international carbon markets. But we need these markets to work differently. Next. So, in the light of this, right, what did Copenhagen actually do to help us get to this low-carbon economy, right? And while I think people, far and wide agree that Copenhagen was a dismal failure, I was disappointed, even though I have the lowest possible expectations after having been to all of these meetings, more or less, since the first one, COP1 in Berlin. But if we look at, let's look at beyond that and try to see some kind of, let's say, positive side. There are things that we can find, right? First, Copenhagen has shown that there is a political commitment by all countries to actually do something about it. There is this, let's say, the political willingness to agree to limit global warming to a temperature increase of plus 2% compared to pre-industrial levels. This is now supported by communications of countries with the UN, over 100, representing more than 80% of global emissions, who have now associated themselves with that accord. If you want to know about Thailand, Thailand has submitted a letter saying that they will submit a letter that clarifies this, right? Actually, I was at a meeting this morning where there's a representative from the Ministry of Energy has actually already outlined the details of the Thai submission. And we're talking about a substantial pledge, in my point of view, a minus 20% pledge, which is, in my point of view, a very strong one. Relying on a broad mix of measures, biofuels, renewable energy, energy efficiency. Actually, very interesting for you, energy efficiency, biggest contributor in this, right? Even though Thailand is late, but I was impressed actually with the level of commitment there. We have the political commitment, we have new mechanisms. I just want to refer to this internationally supported mitigation action, which is again basically enforced by international monitoring and verification procedures, right? Some people look at it like a sectoral approach to carbon markets, even though it is completely unclear what the details of that will be. But here's now the chance to actually scale up the whole thing and not go project by project anymore, but to look at full sectors or subsectors and try, through a mix of regulation, incentive, technology initiatives, financing on a larger scale, to transition a whole sector into a low-carbon scenario. I think interesting, but very early stage. We have a RED mechanism. This is a mechanism for avoided deforestation. It's a huge contributor to global warming. It's less relevant for Thailand. We have a commitment for a green climate fund to the tune of $100 billion per year to help countries that request it to support their way into the low-carbon economy. And we have a CDM reform agenda to actually streamline the CDM. Next. What could that actually mean in practical terms? I think the great opportunity for reformed CDM, if I look at Thailand, is actually the integration of domestic policy systems with carbon markets. And I've just picked one example here, the reconciliation of feed-in tariffs with some form of carbon credit regime. And I actually have to apologize, in my example number 2, there's the numbers missing, right? So I'm just going to go through example number 1 also in the interest of time. Now, if you look at, for example, biogas projects here in Thailand, right? They receive an environmental adder for power of ½ baht per kilowatt hour, right? The value of the carbon credit per kilowatt hour is 2 baht per kilowatt hour, right? As I said before, right now that 2 baht is not really relevant for the investment decision because it's so delayed, right? But assume a situation where we can bring that revenue forward and make it more reliable, right? all of a sudden, this thing alone is 4 times more than the environmental adder that is currently in place. 2 years. Like as we go into the post-2012 period, those mechanisms could be up and running and ready to go. What needs to happen in the meantime is obviously working out the rules, positioning, piloting these things, and we are very involved with this, and obviously, like we are right there in the middle of the action, and if you feel that this is of interest for us, please do not hesitate to contact me to discuss this further. Thank you very much.